stock market today analysis for Monday, January 9th, 2023. Before we get into all this stock market stuff, I want to let you know that in the description below this video, there is a link to ihavesuccess.com. Two things I recommend you download. This one is not financial advice. It's not stock recommendations. These stocks are probably not suitable for you. Download them anyways. Use this in conjunction with this download to get an idea of how to select stocks that are suitable for you. Also in that description of this video below is a playlist. I think it's titled Trading Options for Beginners, with beginners in all caps. There's 5 videos on there. Watching those 5 videos, which will also show you how to set up some charts. Watching those 5 videos and using in conjunction with these 2 playlists, you should have a general idea of how to get started doing some paper trading of selling cash secured put options on stocks that you don't mind owning. And the reason why I'm suggesting do that is because if you have the internet, if you have a bank account, and you spend money at least once a year, at minimum, you should be selling cash secured put options on stocks that you don't mind owning. I can come up with a long list of ways that things are not getting cheaper, they're getting more expensive in net result, and overall, it just behooves you to help yourself, help your family, help your bank account. It behooves you, at minimum, to be doing this strategy. So check that stuff out. And I'm going to be honest with you, I have a selfish interest in this. I want to grow and improve in the process. If you want to master something, teach it. I want to master the stock market. Past this. Now, there's a lot of different ways I could do it, but you know, I got this thing about me. I like to help my fellow human beings. By the way, that's me. I like to help my fellow human beings. So, for better or for worse, this is the way I'm doing it. So that's the mission of I Have Success. Homepage, check out all that stuff in the links below. And right here at 2 minutes and 30 seconds, get ready. It's popping up right there. I hope you're ready. Oh, here it comes. 2 minutes, 30 seconds. Boom, right there. 2 minutes and 30 seconds. There's a link to a video that basically gives you 5 reasons to do this. Can't even remember the 5 reasons right now. But it's not how to do it. It's why you should do it. You know, one time I used to take courses from this guy, and he would say, those that know why, well, excuse me, he would say, those that know how work for people that know why. Learn the reasons why. When you know the reasons why, the how-tos become a lot simpler, right? Context, content. The reason why is the context. So watch that video at the 2 minutes and 30 second mark. Remember, 2 minutes and 30 seconds. You can come back and get that later. Let's get into looking at these markets. We're looking at the futures right now, and we have the futures VIX kind of moving up, right? 2 green candles. This green candle seem to see where the body of that is. If you don't know what the body is, see this long skinny thing right there? That's not the body. That's called the shadow or the wick, shadow, wick, tail, whatever. But see that fat part or thicker part? That's called the body. So see the top body of this one? See the bottom body of this one? Right? This is where it opened. This is where it closed. This is where it opened. Boom. It's kind of moving up. Looks like it's hitting in this range. This VIX is a derivative of option action in the S&P 500. So here's the S&P 500 futures. We see that, what day was that? What day was that? Oh, on the 6th. So on the 6th, we had a big jump up in the futures. And where, not surprisingly, you can see it's not, I know you see that dotted line. But look how, like right here, it got over that dotted line a little bit. Right here, look at it, touch that dotted line, right? But it didn't break it. It pulled back a little bit. How do you know it pulled back? Look at that little skinny part. It got kind of close to that dotted line, which is this like 3,900 mark probably, and then it pulled back a little bit. And this day, boom, it just dropped below. But since this day, this dotted line, which for this candle was acting as support, now it started acting as resistance. I get it, it broke above here, but it's kind of more of a range versus a specific, you know, to the point, to the penny kind of number. But since then, look at that. It touched it, pulled back. This one couldn't even get up there. This one couldn't get over. This one touched it. You know, this one's not even getting close. This one kind of touched it, went over. This one kind of touched it. This one got over a little bit. So maybe it's going to turn into, support now. But it's, you know, we don't look at this. It traded all the way up here and pulled back. So we'll see what's going to happen. But this 3,900 is kind of a sticky point. So I wouldn't be surprised if it's going to be coming back down in here, but let's watch to see what happens. Similar look with the Dow Jones futures, right? One thing that's not similar about it is this is below a downward sloping 200-day moving average. This is above a flat 200-day moving average. But as far as these three candles right here, right, look very similar to these three. Even this one kind of looks similar, right? This one kind of looks similar, and I want to be shocked if we look at these other ones and it looks kind of the same. Okay, now these two, the NASDAQ, we got a green candle here, red and red over there, right? Green candle here, the Russell 2000. But a lot of those candles look pretty similar. So I'm guessing that you can see a bit of the sideways type of action here. Remember, it's a range. Generally speaking, it's more of a range than a specific, you know, kind of like that. More of a range than an exact, you know, specific number. It's probably a little lower right in there. Right, this one's a little bit, I don't know, wider, tighter. I don't know which one to call it, but I think you can see that, right? So we're coming up kind of testing, start testing this 200-day moving average over here. Not on this one. Not even close, right? And over here on the 10-year treasury, it dropped off quite a bit on this day, and now we're just basically in the bottom. Something else can come to think of it, right? We got a big candle to the upside here. We got a big candle to the downside here. Now, once you have one of these big movements, look to see, like for example, if you want to know how strong this uptrend is, then you want to start watching, or one thing that you can do is right now, would you say that's kind of like right, maybe about there and up is kind of like the top 10% of this candle, roughly, right? See how it's trading in the top 10%? The last two candles have been in the top 10%. This one, you know, where's that at? I don't know, 25%, but it's in the top half, right? This one, look at that. It's all the way over the top of that. This one just pulling back. So just that alone, like, okay, now we know if price action starts trading down here, right? Now we're moving back towards this. That would not be a bullish sign. That's not a sign to the upside. More of a sign to the upside is having it stay in this top. Same thing, you know, something that potentially looking like a bearish sign is that when price action is staying in the bottom part of this candle. And whatever direction you're wanting it to go, how long does it take to get back over here? So for example, on this one, prices fell, right? And they're under this under right now. The price action is below this. So if it's going to start showing bullish signs at some point, want to see how many days does it take, or candles does it take to get back up here. Same thing like this. If you think the market's still bearish, how many days does it take for the price action to get back down here? The longer it takes to get in whatever direction, you know, there was this big move, gives you an idea of the strength or weakness of a particular, you know, direction. It's not a be-all, end-all, but it's definitely something you can look at. So right now we got two candles, two candles, two candles, two candles, two candles. That's all in the top range, right? So that's looking pretty good. So let's see what happens over tonight with the futures there. Oil. This one specifically WTI crude oil. We and over the last month, prices have dropped down. We're below this downward sloping 200-day moving average. We see prices kind of rallied up here, dropped down. So we're kind of back into this, right into this area. So in a way, it's had a bit of that sideways type of trend. But same thing here. If it's going to go back up, if it's going to get back up to 80, how long is it going to take? Right now, it's been 1, 2, 3, 4 candles. And where's it at? It's about, where's the 50% line? You know, right in there somewhere. But look, it's still trading in the bottom 50% of this candle. Right? And it's basically hitting in this resistance right here from that little bit. You can see it right there. And natural gas has just been moving down. I like just kind of paying attention to natural gas. One reason natural gas futures intrigues me is because Eric Townsend from Macro Voices has repeatedly said that this trading natural gas futures is known as the widowmaker. So if you have a financial death wish, then consider doing that. But so I like kind of watching it, and it's a bit of an energy thing. And ultimately, you know, if you like the green chicken, then there's people that think that basically energy is like the the master resource. Gold. Now, definitely this one, treasury yields, gold, and then later on when we look at the dollar, there's certain things that have more political influence on them. Gold, silver, treasuries, dollars, whatever fiat currency has a lot of political stuff. So we have been talking about this, and this is a 1 month chart. Each candle's 1 day, but every day that goes by, we're missing information. And what was nice about this, we're not going to be able to see very much longer, is see how there was kind of like prices were kind of hitting this roof kind of, but the bottom kept pressing up. It creates pressure, and generally speaking, wherever the price is remaining flat and the other price is pushing up, it tends to boom. And we were waiting to see if that was going to happen. We're wondering, because it's politically influenced. Is it for some reason? Are there some political or quasi-political institutions? Are there some corporate linked, corporations linked with politics that whatever, if you don't think that type of stuff is true, like, I don't care. I don't need to convince you of anything. If you want to live in ignorance, feel free. Some people think it's bliss. So I was wondering, is it gonna bust out? And it did. Boom, right? Pushed outside of there. Now, silver tends to lag, but what do we got going on with? Ooh, that was not a good straight line. Really close. We got kind of like this somewhere in here, kind of like that same thing going on. And see, it was pushing up here. But it didn't do it. Look at that. Look at that. Broke down here. So now it's more like we're kind of got this top around 2450. Little bottom right there. Something, I don't know. And keep in mind, like, we're trying to pull an opinion here of which direction it might go, looking at a very limited amount of data. Right? We got 1 month of information with a 200-day moving average. So 30 candles roughly representing 1 day, and a little thing that's showing us for the last 200 days what the trend has been. But overall, we see this is sloping down, but this is well above that 200-day moving average. So we'll see how things play out. But this one too, I think it gets some political and quasi-political, just because the banks aren't necessarily political, in my belief, they're definitely tied in with those politicians. Bitcoin, look at that, below this downward sloping 200-day moving average. And had a little drop down right here, kind of been moving sideways, moving up a little bit. Bitcoin, right? So this is the first thing. I would, if you want to keep it really simple, Bitcoin, consider, like, unless it gets over 20,000 and it keeps closing over 20,000, I wouldn't even consider it. Like, when people talk about it's going to 100,000, or people talk about it's going to 500,000, well, You know, the road to 100 to 500,000, in that journey, you got to pass this number first. If you cannot pass this number, not getting to a bigger number. There's no way you can get to 26 if you can't get past 20. And there's no way you can get to 100 if you can't get past 26. You know, no matter what your narrative is, no matter what you want to have happen, that's just the way that it is. If you weigh 50 pounds and you want to weigh 75, if you can't get to 60, you're not getting to 75. I'm sorry to be the bearer of bad news, but that's the way it works. So let's take a peek-a-rooney at these general markets. Now, we looked at this one already. We looked at Bitcoin, we looked at oil, we looked at gold. Dollar, look at this, boom. Now the dollar was kind of like, we were watching this kind of this channel that it was in, something like that, right? It was in kind of this channel here, broke out, we're wondering what's going to go on, and boom, now it's back in this channel. So sometimes that's what happens, you know, like this is what I mean by when I was talking about Bitcoin. Let's say if this is the 20,000, it's got to get past 20,000, it's got to stay, right? Can't drop back in down like this. So seems like we're in this range. This UUP over the last couple days has given us lots of examples to keep talking about. Not so much about UUP, you know, forget about which one it is, but just giving us examples to look at about charts. Look at this little strange patterns it keeps having. It's like stair stepping down. Put them down. This one kind of made this weird pattern, and then down. So so while it's doing this, right, it kind of fell back. Oh boy, kind of was like something along those lines. That's pretty. Obviously, that's not the best drawing there, but when you notice that something is in a trend, whether it's going up, down, or sideways, but you notice that it's kind of in this trend, right? See, it kind of got up to about here, it falls down. It falls down to about here, which seems to be in line with there, kind of rallies back up, falls down. This one, it's breaking out of this. We think, oh my gosh, is it going to stay out of that? And it seemed like it, right? Kind of broke out here, but boom, it just really dropped down. So what you can potentially do is, if it is you know, it's a trend that's kind of been going on for a long time and it involves some skill. So let's just talk about theoretically. You can potentially look for, when it gets to the top of the range, to do some sort of strategy that would profit if it goes down. When it gets to the bottom end of the range, you could do some sort of strategy that profits if it goes up. But you got to be able to pick the range, right? You got to be able to make sure that you have enough wiggle room in case it does something like this. Like if we would have did some sort of trade this day, thinking, you know, planning it to go down, we got to make sure we have enough margin, we have enough lot of data in case it does something like this. And we have to know what we're going to do if it pops up like this. We got to have a contingency plan even before it pops up to say, when we put this trade on, before we put the trade on, we got to have a plan of like, hey, what am I going to do if it goes against me? What am I going to do if this happens? What am I going to do if that happens? What's nice is that there's only 3 ways a stock can go. I'll give you a hint. Are you figuring out the third? That's it. That's the only 3 directions stock can go. So if you're putting on a trade and it's in a downward trend or an upward trend or whatever it is, and you're you know, trading some sort of like channel that it's in, ask yourself before you put the trade on, what am I going to do if it goes this way? What am I going to do? What if it hits this number? What if it hits that number? What am I going to do if it goes this way? What if it hits this number, that number, whatever? What am I going to do if it goes this way? This number, that number, blah, 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 you know, just plan. There's only 3. You're not dealing with 40 different variables. You're dealing with 3. So think of a plan for each of those 3. Think about what you're going to do no matter which way it goes. And then you can just, then when it comes down to the stock moving in one of those directions, even if it's against you, then you don't have to really get your panties in a bunch and you can just take action. And TLT, which is an ETF that it's like an ETF simulating 20-year treasuries. And so right now we see that TLT, right, we had this only looking at 1 month of data, so we don't really know what's going on, but we see it was kind of going up, or seemed like it was going up, even though these are red candles, right? This price, this price, this price, right there, right? That's going up. Pivoted right here, came all the way down here, pivoted here. Now we're back up against here with these two, definitely this one, but these candles being pretty strong uptrend, right? So what does this tell us? This tells us it's possible, it's possible that some treasury rates have been going down. Here's a 20-year. Look at that, right? Been going down just a little bit. So generally, very generally speaking, what's been happening for a while is that whatever direction TLT is moving, not the rates, it's actual candlesticks, the stock market has been following. Now it's, as you see, if we were to look, it's not an actual candle for candle, but generally this has been going up, so we might expect the stock market to keep going up. Don't follow that as a hard and fast rule, but it's kind of just generally been happening for a little while. And so yeah, we'll see how accurate it's going to be. But interest rates on the 20-year treasury coming down a little bit. Probably if more people start buying them, think about when it comes to the value of a treasury and the interest of a treasury, they're two different things. Think about a job. If you have a job that a lot of people want, everybody wants this job, you don't have to pay as much, right? You don't have to offer as much. You can offer lower money because you got so many people that want to do this job, right? You got so many people wanting this job that you can give a lower interest rate because you got people buying this product, right? You can lower the amount of money that you're paying people for this investment because you got so many investors looking to do it. Now, when it's like this, when it's going down, you got less and less people wanting to put their money into this treasury. So you got to bring that interest rate up. And the thing that's probably the most important, or debatably most important, is something like this. Look at the 10-year. This is a 10-year. It's at 3.55. Look at the 2-year right here. It's at 4.24. Generally speaking, when this shorter term treasury or any of these shorter term treasuries are higher than these longer term treasuries, that indicates that we might be running into some economic distress. In my opinion, we've already been in economic distress. But as long as, like this 2-year, or even like this, look at 1 month, you're getting paid more to lend the government money for 1 month than you are for 10 years. Even though you got 10 years of risk here, got 30 days of risk here. So for some reason that tends to indicate some, potential issues that could continue or come up. So what might that, if we see that yield curve still inverted, if it continues to be inverted, maybe we don't want to be fully committed to the idea that the stock market is going to hit all-time new highs or whatever. So it's something you can kind of just keep in mind. It's like, even if the stock market pulls up over here, SPX goes over its 200-day moving average, what's that yield curve inversion doing? Let me see how's this going to play out. No, maybe it's too early to get excited that, it's over the 200-day moving average. Woohoo, it's bull time. And then VIX dropped pretty significantly yesterday, but today, was it yesterday? That must have been not yesterday, but Friday. Today, Monday, bumped up just a little bit. We see the last X amount of days, it's kind of been moving down, right? And overall, we're sort of in this range. We've kind of been in this range lately, right? I get it, there's a little outlier here, but you can see there's a lot of price consolidation. kind of like right through this area. So would that mean that maybe we're going to see some sideways? We already looked at the futures, right? We saw that sideways stuff, and yeah, we see that. We see some sideways things going on. But generally speaking, when the VIX is at the higher end of the range, the stocks tend to be lower. When the VIX starts dropping, the stocks tend to be higher. You can use that for a variety of things. Like the first time I ever heard about that, it was just said when the VIX is high, you buy. When the VIX is low, you go. So you can use that little rhyme. Doesn't mean you should bet the whole farm, your retirement plan on that. No, 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 no. It's just like the interest rates. It's just one little clue. One little clue can help put something together for yourself, make a decision. All right, so we got the SPX, which is S&P 500, got the Dow Jones, got the NASDAQ, got the Russell 2000. So what do we see going on? Instead of just, well, okay, we talked about, we got a big candle right here. We talked about where the price action currently is in relationship to the percentage of this candle, top half or bottom half. Right, this price action right now is right kind of like there. So that's like in the top 10%. This one's a little bit lower, right? I looked at that. This one, look at that, boom, it's over it. This one, kind of the same thing. So that aspect, looking at that, that's momentarily bullish. But look at this wick up here. See how it today it's red. That means it opened here, closed here. Look at this long wick to the top. That means that buyers pushed this all the way up here, but selling pressure, look, it dropped it all the way down here. Look at this, same thing here. Opened here, traded as high as here. Opened here, traded as high as here. Selling pressure pushed it all the way down here. Look at this, same thing, same thing. So it's basically saying, at least in this candle, now we're in the top, right? Top 10% basically, top 20%, something like that. Some of them, you know, just we'll say overall we're in the top. On average, we're in the top 10% because these ones are over it. This one's a little under, right? So on average, for all four of these, we're trading around the top 10% of the candle. But tomorrow, maybe, like, I wouldn't be surprised. I'm not saying it's going to happen, but I wouldn't be surprised if we see potential a little bit of drop. Doesn't mean it has to close down there, but maybe it's going to test into here. The reason why I think that, or think that's at least a possibility, is because you tried going up higher. Didn't make it. Look at it. It's all selling. It's all selling. It's all selling. And right, so it's kind of like, it's kind of a bit of a range here. Here's kind of a tight one, but maybe from here, you know, to there, right? It's testing that top part of the range. We'll see. Is it gonna pull back? Now, whether it does or doesn't, in a way, is hopefully for you. I mean, for me personally, whether it drops down here or whether it doesn't drop down here is irrelevant to me. I'm just looking to see what happens. Because of like my trading style, I'm less dependent on actual, you know, direction of something, or, you know, short-term directional type of stuff. So if tomorrow, during after the whole trading day is over, and I have a complete candle to look at, if I see that there was some trading into like testing that 50% of the candle or even lower, then I see, you know what? There's a lot of bearish forces at play. But tomorrow, if I see something like this, it's testing to the upside instead of it's testing to the upside, even if it's another candle like this. Then, you know, shows me, okay, 2 days. Now 2 days have gone by, it's in the top 10%. 3 days have gone by, it's in the top 10%. Or how many ever days. Or on the third day, you know, it's testing down here. So it's kind of giving you an idea of what's the strength of the bullishness. Is it really strong? If it's really strong, we probably wouldn't see this. If it was really strong, we would see this, right? right? You got a big up candle here. You're going to at least see something like this. So we'll see how it plays out tomorrow. I would not be surprised if it tested a little bit lower. Why else would I not be surprised? Because we're under the 200-day downward sloping 200-day moving average. You see how price action has basically been going down. Under the downward sloping 200-day moving average, price action basically down. Under the downward sloping 200-day moving average, price action closed here. Ooh, almost sideways there. This one, sideways there. So again, I mean, I have no idea if you've listened to this before, but I've said this several times that I really wouldn't be surprised if the stock market is just going to grind sideways. And looking at this stuff, I wouldn't be surprised more. I think my grind sideways to down is what I'm guessing. Ooh, daily. Here's 12 sectors, some of them big, some of them small, that make up stock market overall. I mean, there's some subsectors in there, out there and stuff, but overall we're looking at a good mix. Now, some people only look at 9 sectors, some people look at 11, and should we feel somehow entitled or special because we're looking at 12? No, absolutely not. But you know why I like looking at 12? Well, one reason why, and it's a silly reason, but look at how neatly organized this is. See how same distance from here, same distance from here. Look at that. Versus like, hey, what if one's a little bigger? It just makes things more appealing while I'm making these videos. And so, does that mean anything? It just means that it's it's very symmetrical. And I don't know, I just like looking at 12. I'm looking at a bunch of data. Whatever, why not look at more? So do with it what you will. Okay, so we see right here, we see here that technology, same thing, right? Even though it's green, even though it closed higher than it opened, look at this big wick to the top. Selling pressure just pushed that down. But look at this, it's above that 125, right? You can see that. You can see that below this, right? It was having a hard time. Look, it tested up here, dropped down. So again, let's see what happens tomorrow. Is it gonna start building a base? Are we gonna see a new kind of trading range like this, or is it just gonna be like this, another like breakout point and failure? Healthcare. Look at this. Healthcare took a really big drop for a while. Healthcare was like one of the stronger sectors, but healthcare, see here, it's kind of been trading in this range, and it kind of up in this range right here. But we see this price action here, this price action here. And it seems to have, boom, really dropped down. It went from the top end of the range, boom, right down to the bottom. So because this sector has not as much weight in the S&P 500 as this sector, but it has a significant amount of weight. So that is a little bearish clue. XLF, financials. Financials, look at this. Testing that 35. Right, 35 right here, broke out above that, but 35.50 having some problem. You see back here 35.90. So let's see, is it going to stay? Is it going to stay up there? Now, one thing that I've heard is that the powers that be are really trying to push the market up because we're going into earnings season, and they don't necessarily think corporate earnings are going to be good, so they're trying to push it up. So when it drops, it's like not dropping from down here, it's dropping from up here. Is that do I think that is a fact? Nope. I'm just saying that someone that has a lot more experience than me believes it to be a fact, so I'm just putting it in there as a possibility. And then over here on the industrials, we see that it broke out of this, it's kind of this trading range it was in here, broke out with this candle. And speaking of where is it at? Like this big bull candle right here. We're in this top, we're over it, not even in that body. Let's see if it falls back into here. This one, you see we're in that like maybe top, would you say 25%? This one, top 25%, but still, above 50%. Here, big bull candle, right? That's a bearish candle in and of itself, but it is above this one right here. And communications had been rallying up. Looks like it's gonna hit some resistance right in here. It's probably this kind of area of resistance, something like that. We'll see how it happens below that downward sloping 200-day moving average. Energy. Energy has, I mean, look at it. This is the high, this is the low. It literally is like, whoop, like that today. Up to that. But it closed here. Yeah, that's really messy. So energy, I used to do a lot more paper trading and real money trading on crude oil futures, and so I used to be a lot more in tune with it. But lately, I just haven't been, because it doesn't really move with the stock market, and I've been watching the stock market so much. But I like energy sector overall myself, so I have a entry level understanding of the energy sector. Consumer discretionary. We see that been moving down, trying to rally up, hitting this 35. Consumer staples, pretty volatile. What's going to happen with this? I thought we were going to get a W. Looks like the generally, like when things go up, you're going to see, you can see like a W type of pattern, right? When things go down, you might see an M type of pattern. And so if you start noticing that, you can switch it to a line chart if you want, or whatever, or just kind of eyeball it. You start noticing, where is it? Kind of like this, comes up here, maybe comes down to about here. But look at this. Look at this part of the W, right? If it's going to be bullish, look at this. Higher. Right-hand side, higher. Now, it still could go up or whatever, but, you know, you got this barely up-sloping 200-day moving average. If this were to, like, it would look a lot more bullish to me if it pulled back to just about there, right? And we had this part lower than this part. Same thing with the W, with the M. When your left-hand side is higher than your right-hand side, and then it breaks this part right there. Right there. So we're looking to see, is it going to break that part? So far, it says no, right? Came up to this. If it was really strong, bullish, today's candle would have been like up here. So just more little clues to me that's making it look sideways. Look at this one, utilities. Potentially had potential for an M. Doesn't seem to really be forming. Kind of looks sideways-ish there. Real estate, it was really just dropping. Now it's a lot of stuff just kind of been moving sideways. And XRT for retail. At least look, it's building back up. So looking at 1 month, right, we got this big drop down here. But let's just look at this area first. How many days is it taking to get back up to this 64? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 lowest. 10 trading days and it's still not up there. So why do I bring that up? Just to give you another way to kind of like look at stuff. Like, okay, how many days is it going to get back? How long is it taking to get back up here? How long is it taking to get back up here? It's taking all this time, right? And this is roughly 30 days. So we see I had this high of 35. You know, how many candles is this? It's probably over 10 candles, like definitely over 10, maybe it's 15 or 20-ish. I don't know exactly. But yeah, so things to me still continuing to look sideways to bearish. And maybe you're starting to see, you're starting to see it more. I have no idea, but it's been the same thing. It's been the same thing. It's like we got this little, so you see in the past, prices got up here, right? They pulled back down here, came up again, pulled back, test this, but now this time it's on that side of it. This area right there. Looking over this way, you see it did it right there. You see it did it right there. I know what didn't exactly get there, but it got darn close, right? So it's doing it right there. Look at this. Did it right there. Did it right there. It's kind of doing it right here again, right? So if it's not going to break above this, what number is this? You write it. Hey, it must be 390, right? We keep talking about that 390. And then to the downside, now it doesn't mean if it breaks above this 390, it's going up. But that's definitely a place of, right now, that's probably acting as resistance. And we got this about 380. It's kind of acting as a support. Right in, is it 380 exactly? Maybe not, you know. Maybe it's like a range of 380, a range of 390. And then above 390, where else do we got? Like, maybe, I don't know, all the way somewhere up here. I tend to be watching like the 420 for some reason, like, but right now it's in this range of 380 to 390. You see down here it 357. Where's this one? Oh, that's right, because of this 420 right in there. But look at that. Even here, it's a little bit of range right in there, a little bit of range right in there. So it's, I'd say, if you want to have an idea of which way the market's going to go, one thing that I had learned recently is that for the last 100 years, about 78% of the time, whatever the market does in January, about 78% of the time, the rest of the year plays out that way. So that's not 100% of the time, right? 78%. 78% of the time, whatever January does. Well, that's pretty high. That's only two percentages away from 80. So that means 22% of the time, the stock market doesn't play out. So it's not a guarantee, but it's a high probability that whatever is going to happen. So if we keep seeing this sideways range, then there's a 78% chance that it's kind of going to go sideways. But I think our range can be fairly big. Like there's tighter ranges, then it kind of gets extended ranges. So, you know, if it comes down and it tests like these, see where it tested here, tested there, that's roughly about 357, roughly. Right? So if it doesn't break 357, or it doesn't really break this, you know, if it breaks 357, you say, hey, Brent, it broke 357, it's at 355. You know, if it kind of wiggles in that range, then goes back up, then, you know, it's range. And somewhere around this 420-ish to 430, you know, somewhere in there. But first one I'd be looking at is this right where it's at now, 380, 390. If you want, you know, break it down in whatever increments. But that should give you an idea if it might just sort of, you know, bounce back and forth and kind of not really go up or down too much and just kind of end this bear market by going into a sideways market. I'm not saying that is what's going to happen. I'm just saying that could happen, and it seems like, looking at what's happened in the most recent past here, it looks like it's probable. We see it happen kind of here. See it happen here. I'm sure if we were to look at more data, we would see that. So as we talked about, there's only 3 directions a stock market can go: up, down, and sideways. So right now, it's basically going sideways. Look where it's at right now. Look where it was at right there. Even right here, pretty close, right? It's kind of been sideways in this range of up to here to here. But where's it at? In the middle, right? Whatever. If it ultimately stays kind of within this range, then what are you going to do? What are you going to do? How are you going to make money if it's range bound? There is a way. One way that you can make money is by selling cash secured put options on stocks you don't mind owning. The reason why you can make money that way, forget about that this is the SPY, and forget about the prices. Just look at this. Fill in whatever price fits your trading account. If you got a $10,000 account, then fill in the appropriate size of stock for that. If you got a $2,000 trading account, same thing. Pretend this number is whatever fits your budget. So now we know another thing is, like, think about what's going on in the economy. Think about like politics. Think about what's happening globally, all this type of stuff. You see a lot of happiness and just overall, great things going on. I keep hearing reports of people getting laid off at these tech firms. I keep hearing we got to send more weapons over to Europe to fight a war. I've even heard some politicians talking about nuclear war. Like, okay, that's not necessarily too good for the average person that isn't interested in being a warmonger. So that puts on economies and things like that. That puts some downward pressure, right? So we got forces in the world that are kind of anti-growth, unless you are a company like Raytheon, unless you work at Raytheon, unless things like that, right? Unless you just love people dying and somehow you make money from that, then that's some downward pressure, right? Your average person that works at, let's say, I don't know, sells cars for a living, like, nuclear war doesn't really help that guy out. The lady that whatever sells houses for a living, nuclear war really doesn't help her out, right? So generally speaking, most people do not profit from war, generally speaking. Now we know there's a segment of society that does, like, I get it. So we got some pressure though, right? Some bad things going on. Turmoil, political turmoil, social turmoil in the US, right? Forces going down, right? But we also have some forces going up, like the President's Working Council on the financial markets, aka the Plunge Protection Team. So that sometimes the Plunge Protection Team is trying to rig things to keep it go up. So you got a lot of forces going down, and you got some stuff that's trying to push it up. If they do not do something like quantitative easing, if they don't do that, then we probably could see some sideways to downward action. Why the whole quantitative easing thing? This right here, QE, baby. See this? QE, baby. Now what if you say, Brent, it wasn't QE, it was Operation Twist? I don't care, baby. You doing some, when you got the Plunge Protection Team, you got the Fed, whatever, the Treasury, when you got those guys getting together and pulling and implementing some strategies to get the market going up, who cares what name it is? If you knock somebody out, who cares? If you, instead of calling it right cross, you call it your swift one. It's like, hey, you punch that guy with a right cross. No, I didn't. No, I didn't. I punched him with a swift one. You're lying. I didn't do it with a right cross. Like, who cares? Who cares what the name was? If you knocked him out, you knocked him out. You hit him with your right hand, knocked him out. Whether you want to get, don't get on the semantics of like, well, this technically right here, Brent, that wasn't quantitative easing, that was Operation Twist, that was the effects of QE, but they don't call it QE, right? Whatever, unless they do something like that, we're probably not going to see boom. But if we do, you might see boom, and you might see the prices of your stuff go boom. You might see the value of your paycheck go boom. I don't know. We'll see what happens. So, stock market can only go three ways. Up, down, sideways. I've explained to you that I think there's a high probability that we're going to see sideways market. You can sell cash secured put options somewhere down here. How about how if this let's say this is a stock that fits into your budget. Let's say you got a $20,000 trading account, and this is a $20 stock. That means you sell one cash secured put option on it, and you get assigned. You need to come up with $2,000, buying 100 shares, right? How comfortable are you with this? Here's the current trading price. Here's this low. You want to sell it here? You want to sell it here? If it drops down here, are you comfortable buying it here? If you're not comfortable buying it here, do it out here. But if you say, well, there's no premium out here, well, sometimes you don't make a whole lot of premium. You got to balance all these things out. Don't just think about how much money is coming into your pocket. Think about the risk too. So with that, my friends, I'm going to call this video finito. And that may or may not be a real word. I really don't know. You can let me know. But this is the type of stuff that I think some people might benefit from. Yep. So look for the support and resistance. You guys have a fantasmo day. Aloha.